everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Today, we're taking a look at the good old crude oil futures. Today, crude actually moved pretty well. I definitely can't complain with the movement that we had today, and a lot of it kicked off in kind of a twofold fashion. The overnight session was a little bit slow, but had some good breakaway moves. And then we went a little bit range-bound, nice breakaway again, range-bound again, started breaking away again. You can see it's a lot of trending ranges. So with that overall emphasis on the market, you know, kind of finding a little bit of a breakout stall point, it gives you a good idea in terms of what to expect next. We came in and we see that we are in a big breakout mode to the upside, and we're in a range afterward. We just saw that on the downside over here. They broke out, went range bound, they tried breaking out and failed this time around and reversed back up. So we have a breakout to the upside, and if they are going to fail and reverse back down in a range, they're likely going to do it right around here, right? They failed through the top edge. That's a perfect place for the sellers to try to drive in and get the market going lower. The big difference here, though, is that they failed to, right? Big bearishness, good follow through. Buyers try coming in, and then things start shifting a little bit. We run into that prior little swing low down here, and we start hitting a boatload of buyers. They're not letting the sellers take it back down. The sellers try coming in again, big old bear bar, and it ends up being nothing but a trap. Twin reversals right back up into a strong bull bar off of 60-minute support, and that allows the buyers to slam the market back up. That failure that should have had the market falling back down to the lows did not show up, so we assume that it is a failure, and we're going back up for at least another leg to the upside, maybe like an ABCD. So a nice little buying opportunity here off of 60-minute support before they came back, tested it again, bounced up again, another nice opportunity. So two off of the same location. And now we know that the sellers are stuck. The sellers were likely selling inside of here. They came back, hit the break-even point, tried turning back down again, didn't do so well. Then they start breaking above them. Now keep an eye on this break-even point, because notice what happens. It comes back, holds it to the tick. Obviously the sellers are a little bit nervous, and they may even be getting out at break-even. It starts to rally away, they get a little bit nervous, comes back, they get out at break-even, and that allows the slider door to open and all of the buyers to go flooding in, and that's why there is a final buy attempt right there to get the movement going back up towards the highs, with just the sellers exiting. They have no reason to stay in anymore, and therefore we are looking to the upside to drive it in the opposite direction. So overall, nice, quick and easy, straight to the point, but a pretty good day overall in terms of the psychology of things, knowing that the sellers are getting really nervous and using that to our advantage. So overall, again, a great day. As always, if you have any questions about it, you can send an email to jbrink@slingshotfutures.com right at the bottom there. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit entertaining as well. And we'll see you next time.